Right, good morning, traders. Happy Monday. Hope we all had a good weekend. Definitely some good football, if you're into that kind of thing. But let's dive in here. So as a heads up, I'm going to be on the road this week. And then young Chandler is celebrating his birthday this week. So both him and I are going to be a little bit missing in action. In terms of video uploads, I'll do the best I can to get some content up here. But just a bit of a heads up, I'll be on the road, so I'm not going to be here for Wednesday's pre-market prep. And Friday is Chandler's birthday, so I kind of doubt Chandler will be here Friday morning. But I'll do what I can to keep you all posted as far as my trades, kind of my thoughts here. So with all that being said, let's get jumping in. Hey, good morning, Kerry. Yeah, definitely. Hope everyone had a good Thanksgiving. Got to enjoy the holiday season. All right, y'all, let's get going here. So I did upload the Sunday prep video yesterday, and just kind of as a quick rehash here, I'm going to just simply ignore the news, which I think you want to do as a trader. So, in my opinion, just kind of focus on structure over everything. Because here's the way I look at it. If this new variant of the virus becomes a huge issue, the market's going to quickly tell us, if that makes sense. So with that being said, I think you tune out the news, at least as it relates to your trading, and just focus on the structure over everything. So look at the futures here. Pretty good bounce across the board. So your S&P futures are up about 1%, kind of grinding back towards the 21 EMA. And your QQQ is up about 1%. So this continues to be a really good looking daily squeeze. At least I think so. But then you look at the small caps here. And this was a big part of the problem last week. So the Qs, they held a good structure last week. Even the S&P 500 held a pretty good structure. Majority of that selling pressure, it's over here in the small caps. So granted, you're up about 1.5% this morning. This is still a pretty sketchy structure. You're under your 50. You have no stacked EMAs. So from a daily charts point of view, that's the furthest thing from bullish. Where the QQQ, to me, continues to look really bullish here. So small caps, a little bit nasty as far as structure goes. The Dow Jones, this kind of leaves a lot to be desired as well. Negative histogram, so that squeeze might fire short. So I think your Dow and your small caps, not the best looking structure to a daily chart. All that being said, though, your S&P 500, hanging out here at the 21 EMA in a brand new daily squeeze, if this continues, even in the face of the volatility, I think your S&P continues to have a good structure. But as far as indexes go, I think the Qs look the best here. So there's kind of a quick look at daily structure. But then if we take a look at weekly structure, absolutely nothing happened last week as far as the weekly trend here for the Qs. As a matter of fact, it's more of the same. We've just been chopping at the weekly AEMA. So this continues to be a really bullish weekly chart. And then for the SPY here on the weekly, holding your weekly AEMA with a brand new weekly squeeze and stacked EMAs, regardless of news, it's a bullish structure. It's just kind of that simple. But I do think potentially allow for a little bit more volatility and downside here. I think you give yourself some wiggle room. So in terms of weekly structure, I like the S&P all the way down to the weekly 21. I like it a little bit lower, but just kind of as far as a major level of support, the S&P could roll over to minus 3 ATR here on the daily chart. You're still looking at a really bullish weekly chart. And I think the weekly chart is the one you want to give a bit more respect to as far as structure goes. So the Qs here. The Qs could come into the weekly 21. I think it's a buying opportunity. And that's a flush all the way down to minus 3 ATR. So as we currently sit, structure for the Qs on a daily and a weekly continues to be rock solid. Structure for the S&P on a weekly and a daily, I personally think continues to be rock solid. I think they're rock solid all the way down to the weekly 21. So that's the amount of wiggle room I'm going to personally give this market. But I think a lot of us know that a huge part of this is going to be the volatility index. So I think we're setting up for a pretty good bounce here. And perhaps this bounce takes us into tomorrow. Just a crazy move out of the VIX last week. So you gap up 50%. Typically with the volatility index, you're going to get your push into about 2 to 3 ATR. And typically this takes place over the course of a couple sessions. So everybody's complacent. Then you get that big spike. But it's typically just a spike to like 3 ATR. Then everything dies down. So with a huge gap here to like 5 ATR, to me, it does make a lot of sense that things at least simmer down here early this week. It's not to say the selling pressure and the volatility is done and over with. So the moral of the story is, in terms of the structure of this trend here, everything is still intact. In my opinion, it's still intact all the way down here to the 21 EMA on the weekly chart. So I'm giving the market plenty of wiggle room. But in terms of open positions, nothing's changed on my end. I still love Amazon here. And I love Amazon. I'll show you the weekly chart. I'm buying Amazon all the way down to like 3,400. If I can build a position at the midpoint of the weekly squeeze, I'm personally all about it. So the weekly squeeze looks great. The 3-day squeeze looks great. I'd like some of that at the 3-day 21. And you got your pullback here to the 21 EMA on your daily chart. So unless you're, under the opinion that tech stocks have put in a high for the year, I still think you're looking to pursue this weekly squeeze. And I think what you get last week is that ideal opportunity in the face of some selling pressure to build a good entry. The entry up here just kind of, quite frankly, sucks. But as you get a good pullback to your daily 21, that's where you're looking to take work, take action. And thinking in terms of options pricing, calls are getting cheaper, the puts are getting more expensive if you're trying to do a credit spread. So I think in the event you get a bit more downside here in the market, and in Amazon, so long as the weekly squeeze continues to hold the good structure, I think you're looking to build a position for like January expiration, which is what we're doing over here at Simpler. Another one here is Apple. Beautiful weekly squeeze. I think the 3-day. 3-day looks rock solid. So I think if Apple pulls back to your daily 21 EMA, doesn't change the structure of your weekly squeeze, but I think there's a window of opportunity to buy those calls as they're getting cheap, or to sell that put credit spread as there's a lot more premium. So the moral of the story is I'm looking to buy the dip here in these good-looking trends. I think Netflix is another one. Good-looking daily squeeze there. I think Tesla. I mentioned last night, the only thing to keep in mind with Tesla, you have a really big average true range. In other words, it would be nothing for Tesla to go down 5 or 6% today. Tesla can go down 5% today. It's just chop. It's just consolidation at the buy zone. We could go up 4 or 5%. It's pretty much just as useless. So as long as we're trading between +1 and -1, we're in that consolidation, that buildup of energy phase. But back here, you're going from $800 to $1,200. Your average true range is going through the roof. So a typical day of work here for Tesla is like 70 points up or down. It's going to feel like a lot, but in terms of structure, it's just consolidation at the 21 EMA. So, on a day like last Friday, when I think Tesla's down 2 or 3%, don't focus on the -2%. Focus on the structure. You're just chopping here at the buy zone. So I continue to like Tesla here ultimately for a push back into a brand new all-time high. But I'm going to give the wiggle room here all the way down to -1. We're not printing a daily squeeze just yet, but when you're chopping at the 21 EMA, you basically treat it like a squeeze. So I think you give a trade until December, January, but as long as we hold structure here, I think Tesla looks really good. So we got a few different spreads over here, a couple different rooms. Last one I want to cover, though, because we did cover a lot of this in the Sunday video, is Google. So Google's interesting from this standpoint. There's a bunch of squeezes here, and I would love it down here at the weekly 21 EMA. But you got a weekly squeeze, you have a 3-day squeeze, you have a daily squeeze, and you got a really good uptrend. So typically, This is something I'm trying to buy pretty quickly when we get the flush here. The only reason I'm being a little bit hesitant with Google, and the same thing applies here for Facebook, that they're the two biggest holdings in the communication sector, XLC. In the old XLC over here, isn't looking too hot. You're firing a daily squeeze to the downside. So if this continues to roll over, it could potentially drag Google and Facebook with it. Now, from another perspective, maybe even if the communications keep selling off here, QQQ rallies back towards brand new all-time highs. That might be enough, to kind of carry Google and Facebook higher. So they're a part of tech, but they're also a major part of XLC. Where I like an entry in Google, with that triple squeeze it's setting up right now, is if we can start to get signs of a bottom here in the communications. I don't think we need the communications sector to go back to brand new all-time highs to get a really good trade out of Google. I think at the very least, though, if this can just stop tugging it towards the downside, makes Google a much easier trade, especially if tech continues to be strong. So what I would look for here, looking for some buy signals so you can use your ready aim fire, looking for exhaustion of that bearish momentum. Hopefully that makes sense, though. I love the squeezes here in Google, but it's got XLC tugging at it right now. Whereas Apple, Apple's holding up a lot better because it doesn't have a weak sector like the communications trying to drag it lower. So I think at the very least, XLC starts to bottom out. You get some buy signals and some exhaustion. I think that does Google here a world of favors. So for me, the ideal entry on Google, which we might not get here, quite frankly, but for me, the ideal entry would be back at the weekly 21. So you have 3 different squeezes right now, this being the biggest of them, the weekly. That's going to be my primary focus. So allow for a bit more downside to like 27.50. That's where I'm getting really interested. But all in all, that's pretty much what I got for y'all. And the game plan here really hasn't changed, mainly because the structure of everything I'm focusing on hasn't changed either. And I think being with, sitting with trades that expire in January, and being that they're credit spreads, at least for me, makes it a lot easier to sit through a week like last week. We're getting the selling pressure, you're getting the volatility. As long as it doesn't change the structure, at least as of right now, it's really no concern for a trade that expires in like 50 days. Structure starts to change, then my opinion, my game plan will change. But for now, good looking bounce. We'll see if the bounce gets sold off. But if we just keep hanging here at the daily 21 EMA, it's good structure. Continues to be good structure. So I think you tune out the news, focus on the charts, let the market tell you what's good here. But let's see, we got just about, it's at 9 o'clock. All right, I got to jump into a live trading room here in like 10 minutes. So real quick, let me get caught up in any questions. Yeah, Michael, another good observation. In terms of the communication sector, now obviously Facebook and Google, they're kind of the big fellas in that group. But I mean, this isn't doing it any favors either. So I think a good observation, probably a pretty good sector to take a look at as far as the top 10 holdings. I think Comcast comes in at like 3rd biggest holding. It's just not pretty. There's a lot of red 10x bars, a lot of negatively stacked EMAs. So I think it's a good observation for a swing trader. You got good structure here on Google, but that XLC is just trying to tug it a little bit lower here. So I think Google's a great entry in that triple squeeze once the communications start to find some support and try to put in a bottom. As of right now, though, we'll see how today goes, but it's not the prettiest chart. That is for sure. All right, guys, I think we're good here on questions. If y'all got any charts you want to take a look at, let me know. I can hang out for a few more minutes here. Otherwise, I got live trading this morning with the simpler scanner group. So I'm going to be firing up some scans today. Just don't lose sight of this thing, though. Definitely keep a close eye on VIX. So you're getting the bounce here. VIX is coming in. You're still up here at like Sketchville. Your volatility index is still up here at plus 3 ATR. So this isn't low volatility. Here's low volatility. Buying the dip, getting long works really good down here. So don't confuse the fact that VIX is down 15%, that the market is jumping. Don't confuse that with volatility has completely retreated, and now we're looking at clear skies again. I still think way too early for that. And that's why I think you look at a weekly chart and you say, hey, this thing is pretty damn bullish here, even if we fade down to the weekly 21. That gives you a lot of wiggle room. And I think if you're getting long here, just increases the odds of you catching the continuation of the trend, just in case we got to get a little bit more selling pressure here first. In other words, I'm not too sure if we go right back towards all-time highs. But I mean, what the heck? We all know this market. Oh my God, it's the end of the world. And then 3 days later, right back you go. So Jason, good question. And Jason, I think this is where looking at different time frames is helpful. For example, with Google, my ideal Google on entry right now, or my ideal entry on Google right now, is actually 3 ATR under the daily 21 EMA. Reason being is I'm just going to put the focus here on the weekly chart. So I think the real answer is it really depends on what time frame you're really trying to focus on. So say that time frame is the daily chart. To me, the buy zone is anywhere between +1 and -1. So there's your buy zone. I think typically the stronger the stock is, vast majority of our entries are going to take place above the 21. However, do be open-minded to maybe even just taking like a partial position down there at -1. Because then when the move unfolds in your favor, you're catching 1, 2, 3, maybe 4 average true range moves in your favor. But it really depends on the time frame you want to work with. So it's a daily, it's a weekly, it's a 3-day. I'm interested at +1, -1. More often than not, though, Jason, it's going to be at the 21 EMA. So I won't wait for 1 or 2 closes, but good question. Definitely a good question. All right, a few requests here from Microsoft. Let's take a look here. Daily squeeze looks good. So keep in mind right now, it's not going to so much be about Microsoft. It's not going to so much be about Amazon or Apple or Tesla. When we get these spikes in volatility, a lot of your thinking should shift towards, focus on the indexes. Now you take that focus on the indexes here, then you come to the realization, hey, Microsoft looks really good. Brand new daily squeeze, you got stacked DMAs, you're trading here at the buy zone. All you did was dip to your weekly 8. So you have a good uptrend here and you have a good structure. Now, if the market pukes and rolls over, down goes Microsoft. But if over the next couple of weeks the market finds support, continues a daily squeeze, and then just ultimately at some point the trend continues, then this is a kind of structure that's going to serve you well. So I think our job right now is to try to build our watch list and have as many of these kinds of setups on the watch list. But then we're waiting for a bit more confirmation out of the indexes, waiting for a bit more confirmation out of the volatility index. Because if the VIX goes back up to 30, down goes just about everything. So I suggest to keep a major focus on the indexes and volatility. If and when things look like we're going to turn back towards the highs, I think you got to love the dip to the 21 here. So Microsoft looks really good. Jill, let's take a look at Home Depot. So really, really strong. When you're really strong like this, you might not get your dip to the 21 EMA. It might just be the consolidation at the 8 EMA. So if you mark up the AEMA right now, what I would look for is lower time frame squeezes. Now, is there a buildup of energy somewhere that can kind of propel us off of that launching pad? So it kind of looks like right now you got a 2-hour squeeze. So Jill, I would watch this develop with the idea that if this fires long, could take you into a brand new all-time high. If it fires short, well, if it fires short here, just gives you a good dip to your daily 21, potentially. So I think Home Depot looks pretty solid there. But listen, y'all, I'm not going to be able to get to all the questions this morning. I got to get jumping into a trading room here. But I do appreciate your time. Hopefully, giving you a few things to take into consideration as you work through the markets for the next couple of days here. And I'll do the best I can on the road to potentially try to get a few quick videos up, kind of touching bases. But I appreciate you. Hope you have a good day, and I'll talk